busy time for us at Kalamazoo over the last 3 or 4 months with this scoping study, which we've released yesterday. We're very pleased with the result, and I'd like to share some of it with you at the moment. The usual disclaimer and notice. So just give you the investment case of the scoping study, and we'll put this out at the start, and then we'll get into a bit more detail if we can, and then any questions at the end, more than happy to answer. So what's come out of this scoping study is that we have now developed the optimal route for what is going to be a long life gold project in the Pilbara. We've used a very conservative base case on this in regard to gold price, and that's at $4,500 an ounce. Current gold price in Aussie dollars is 6,100. So we are being conservative, but we think that's appropriate. The scoping study is showing that this project will produce about 524,000 ounces of gold over a period of about 6 years. The financials look like a NPV with a discount rate of 8% of $423 million, an internal rate of return of 47%, and importantly, a payback in just 1.9 years, or about 22 months. Importantly, the NPV capex ratio, which is the $208 million that's going to cost to build this project, the ratio is currently sitting at about 2, which is very strong. Importantly, for a project like this, 83% of the resources are in the indicated category, which is very strong. So that gives a lot of support for us, a lot of confidence in this project. What we do have, or what we do have as well, but which we have not included in this study, is the upside of the underground resource underneath the Mt Olympus open pit. So the project itself is we're just going to mine at the open pit at Mt Olympus for the 534,000 ounces. But as we announced on the 20th of October, we've also identified an underground resource and exploration target of between 350 to 500,000 ounces. Now that's in addition to this scoping study, and those exploration target resources are not included in this study. So if we, over the next 12 months, we can bring those resources and exploration target into this project, in effect, we could potentially double the size of this project. The plant itself is a 1.5 million tonne plant per annum. Very simple. It's just a crush and flotation plant, and it'll produce a high-grade concentrate, gold concentrate, which we'll then haul to Port Hedland and ship overseas to Asia to one of the processors there. This is a very simple approach for a sulfide project, and we think it's one of the real benefits of this project. And of course, we're based in WA, which is one of the leading mining jurisdictions in the world. Just a little bit about the Ashburton and where we're located, for those who may not be familiar. We're in the Pilbara. I've got a number of gold projects in the area. Probably the most important one is the Hemi Gold Project, which Northern Star has just recently acquired from De Grey. A number of other projects. We've got Paulson's, got Capricorn's Karlawinda project. But I guess what stands out for us is that the gold grade at the Ashburton is much higher than most of these other projects, and that puts us in very good stead. We've got a current JORC resource of about 1.44 million ounces at 2.8 grams a tonne, and this is a brownfield site. Previously, about 350,000 ounces of gold oxide came out of this project by a company called SEPA in the period 1998 to 2004. Lots of good infrastructure in this area. We've got the Port Hedland and Karratha nearby. Port Hedland's about a 5-hour road trip. So the project itself consists of 4 mining leases. As I mentioned, it's a brownfields project, as well as 7 exploration licenses. You can see on this chart or map in red, that's the Ashburton project itself. But recently, we acquired the Xanadu Gold Project to the south, and that's highlighted in those green blocks there. So now the project area is about 380 square kilometres. So we're very pleased about just the scale of this project. And you can see the various resources up the top. And these are all JORC resources. But the most important one for us is the Mt Olympus, and that's the one that this scoping study is focused on. It's got currently a JORC resource of 12.2 million tonnes at about 2.7 grams for more than 1 million ounces. So I guess the investment catalyst for this gold project, like many other gold projects around the world, is the gold price. Importantly for us, we own 100% of the Ashburton Gold Project. And the scoping study, which we've been fast tracking over the last 3 or 4 months, really shows that this is a very strong development going forward. But perhaps I'll just talk about the gold price a little bit, because this also, I guess, illustrates where we've come from this project. We originally acquired this project from Northern Star in June 2020. The current gold price at that stage was $2,500 an ounce Aussie. Then in February 2024, so last year, we granted an option over this project to De Grey Mining for $33 million. And the reason we did that was that the gold price had moved up a little bit to $3,100 an ounce. But we thought the proper approach was to dispose of this project to De Grey, who were very keen on the Ashburton project and its resources to feed into their Hemi project. Then, of course, earlier on this year, in May, June of this year, Northern Star acquired De Grey resources for, in effect, was $6 billion. At that point in time, so we're now talking late July, early August, the gold price is now $5,100 an ounce, which is up over 104% since we first acquired the project from Northern Star. And then today, November, we've got the scoping study out, and the gold price now is currently sitting at $6,100 an ounce. So, which is up almost 140% since we first acquired this project. So like a lot of companies, the gold price has actually assisted us tremendously. So the study outcome, yes, as I mentioned before, we're going to produce about 524,000 ounces of gold a year through a 1.5 million tonne per annum crushing and flotation plant. It's a gold in concentrate, which will be exported overseas. Very strong demand at the moment for high-grade concentrate to be processed in other copper gold processing plants throughout Asia, Malaysia, China as well. We think that's the way for us to go. It's a very simple, low-risk approach. Importantly, 83% of our resources in the indicated category. And if you look at this diagram on the left-hand side, you can see this is the design for the Mt Olympus and West Olympus pit. And in red is all the indicated ore. And that's, as I mentioned before, equates to about 83% of the total resource. But what I'd like to draw your attention to is that it goes deeper beyond this open pit. And that's going to be a key target for us going forward. So here are some of the key, I guess, outcomes from this scoping study. 8.5 million tonnes is going to be processed over the period of the next 6 years. Crushing plant 1.52 million tonnes, 1.5 million tonnes per annum, 86% recovery. We believe we can increase that as we continue to optimize the processing flow chart or flow sheet, and we'll be working very hard on that going forward. Producing about 524,000 ounces of gold over the life of the project at an average of about 73,000 ounces per annum. I think the peak is in year 5, where there's 110,000 ounces. Pre-tax cash flow, as I mentioned before, 747 million, NPV 423 million, and the pre-tax internal rate of return at 47%. Importantly, the all-in sustaining cost, very competitive, $2,183 per ounce, and payback 1.9 years once commissioning has commenced. So these are very strong numbers, and we think this will hold the project in good stead. As I mentioned earlier, where we think there's great uplift for this project is in the underground. We announced recently this exploration resource and also underground target or exploration target of between 350,000 and 500,000 ounces, between a grade of around about between 2 to 3.8 grams a tonne. But what's interesting is that some of our earlier drilling has indicated that some of the grades actually may be much higher than this, and that's certainly what we're going to be chasing up. But these targets are not included in the study, and that's what gives us a tremendous view on this project going forward, because potentially it could be easily a long life project of 12 years plus. These are the outcomes, I guess the key ones, and we've mentioned the one at the $4,500 base case. But where it becomes interesting is that if you look at the current spot price, around about $6,000 an ounce, all of a sudden the free cash flow goes from 747 million to $1.4 billion. MPV almost doubles to around about $850 million. So we think that this is where the real opportunity lies. But having said that, we're still going to be conservative. We're going to use the base case, and everything else is upside. Sensitivity. I guess the key thing coming out of this is that this project is most relating to the gold price. That's where the real opportunity is. It's most sensitive to changes in the gold price. Interesting on that, I think for every increase of $250 an ounce, the MPV goes up substantially. Future upside, mentioned before, the conversion of the 17% inferred to indicated. That's a key step for us. We've already designed a drill program to help us do that. We think we can achieve that very quickly. And that's a key step for us in regard to putting out a PFS. Potential to expand that resource. Obviously, that underground opportunity is something we're going to pursue very strongly over the next 6 or 12 months. But as well, additionally, we're going to continue to work on the scoping study in regard to some of the returns. That could be pit optimization, financial, geological, mining. So there's lots of opportunities to actually help us improve the returns of this project going forward. And then as well, there are other resources in the area that we haven't even touched upon, because as I mentioned, we're only focusing at the moment on the Mt Olympus open pit. So obviously we've got the underground potential, but then we've got other multiple resources in the area. And these are JORC resources that we also are focusing on, and we believe can add length to the production life of this project. That includes Peak, 210,000 ounces, Zeus, and also War. And these are all fairly good grades. So we believe that they're going to add tremendously to this project. Plus lots of greenfields opportunities as well. A number of high priority targets, sulfide and oxide, and not just at the Ashburton, but also at the Xanadu Gold Project, which we acquired just recently. As well, there's other targets we have. Northern Star completed when they had this project only a couple of months ago with the project-wide gravity survey, and that's identified numerous targets which we'll continue to chase up. And I guess probably just to conclude, I just want to talk about where we sit in regard to our peers. And these are other developers who've got similar type of projects and are at the similar stage of where we are. Perhaps some of these are a little bit further advanced, but I think what it shows is that the average of our peers on an enterprise value per resource, mineral resource, is around about $117 an ounce. Whereas if you look at Kalamazoo today, we're currently sitting at $29 an ounce. So all we need to do is get up to that average, and all of a sudden you've got a fourfold increase in valuation. So we think that's our real opportunity. The first step for us in that regard was this scoping study, and we think now as we continue into PFS and also further drilling that this will soon change, and we'll catch up to the average of these peers. And probably just the final point I'd like to make is just the gold price. It's come off obviously over the last couple of weeks, but still, if you look at the trend, not just over the last 12 months, but really over the last 20 years, we think we're in a very good position here as a project. We certainly like the gold industry, and we think that that's given us great opportunity to actually really make this project sing. So certainly thank everyone for their support, and I'm happy to take any questions. And part of that, I guess, is just in regard to what are we going to do next? What's the news flow? Of that, of course, scoping study. We fast-tracked this scoping study, and we managed to complete it in probably 3.5, 4 months, which is actually very quick. And one of the reasons why we could fast-track this scoping study is that while De Grey and Northern Star held this project over 18 months, they did some very significant work on this project, almost a pre-feasibility level stage. And that included a lot of drilling, a lot of modeling, a lot of exploration, and a lot of work on the metallurgy as well. And of course, all that information came back to us when the option wasn't exercised. So that's given us a real leg up and enabled us to fast track the scoping study. And we believe that that will also occur now going into the pre-feasibility study, which we're commencing immediately. But alongside that, over the next 12 or 18 months, we're going to do some extensive drilling. One, to take that inferred into indicated in the open pit. 2 is in regard to the underground potential, and of course 3 is in regard to regional, both greenfields and brownfields exploration, where we believe we can add more ounces, and that'll hopefully get us to a DFS stage, funding, and then construction, and who knows, all being well, we might be in operation within 2.5 years. Part of that reason is that we've done a lot of work on the environment and permitting. It's a brownfields site, so we believe that there's no really showstoppers to get this project up and running as quickly as possible. So Ben, that's probably, I guess, all from me. There's a bit of the corporate overview. I think a lot of people know about Kalamazoo. We've got a very tight share structure. Top 5 hold about 36%. Top 20, again, a very large swag. Share price has actually been, it's had some good momentum over the last probably 6 months. We've got about $6.5 million in cash and stock that we're holding in other ASX companies, and we think we're ready to go to now get into PFS and really put some bones on this project.
Great, thanks, Luke, and congratulations on the release of this scoping study. Very positive scoping study as well. And just a reminder to all our attendees here today, we are having a Q&A session now. So if you do have any questions, just please add them to the tab within Zoom. To get started, Luke, you did mention that you've completed this scoping study. You fast-tracked the scoping study in quick time, and you did just have the timeline. Do you think you can fast-track any aspects of that timeline as well, like you have the scoping study?
Yeah, certainly be working on it very, very hard, Ben. Part of that is that we are resourcing up as well. We'll have some more to say about that in the near future, just in regard to putting the right team in place. And that's probably at 2 levels. There's obviously the project management of the PFS, but also the exploration as well. And we believe that, I guess, piggybacking on the great work that De Grey and Northern Star have done over the last 18 months, it's put us in a really good stage to really accelerate this as quickly as possible.
Sure. And a question that's just come in. What are the exploration plans to bring the underground mineralisation into a resource, and will that resource be put into the PFS?
We would certainly be looking to put that into the PFS. We're designing a drill program as we speak. I believe we've lodged a POW as well to start that drilling. Whether we get on the ground before Christmas or not is, we're certainly trying to, but we've got a very extensive drill program planned primarily on that underground over the next 6 months as well. I'll certainly have more to say about that probably in the next couple of weeks.
Sure. Okay. And the upside of the project, it stands out almost as much as the scoping study itself, I think. In terms of the upcoming drilling, how much drilling will you have to do you think?
Yeah, it's early days on that, Ben.
Yeah.
But what we have determined, we have had a drill program designed in regard to bringing the inferred into indicated, and that's not as extensive as you'd expect. We would believe that we could do that very quickly. It's not as many drill holes as required. It's just some density, and so we have had that design, and we will announce that very soon.
Sure. Okay. And just on the PFS again, apart from adding the resource, what are the key drivers which you're working towards in that PFS?
Yeah, of course. A lot of that will relate to actually design, environmental permitting, a bit more work on perhaps the mine design as well, bringing in the various resources into that, scheduling as well, equipment supply and selection. So they're the type of things we'll be working through, Ben, over the next 6 to 12 months.
Sure. Okay. And just interesting peer comparison there as well. It does tell us a lot about where the company's at, and despite strong share price growth in recent times for Kalamazoo, the company still looks undervalued. So what do you think the key catalysts are? I know you mentioned a couple. What do you think they are to get Kalamazoo at the level of some of these peers in the market?
Yeah, absolutely, Ben. And I guess if you look at from when we announced that we were commencing a scoping study in early August, I think we've gone from a share price of 9 cents to 18 or 20 as we speak. So we've doubled already. We would expect then, as we do more work on the PFS, more drilling, both on the underground, the inferred, but also the regionally, that you continue to grow your share price. You could see yourself doubling, and again over a period of time. We'd certainly be hoping and working towards that at least. Especially too, if again you look at that peer comparison, just the average. Kalamazoo, there's a lot of runway to go there to actually just to get to the average, and that's what we'll be working towards, because we think this is a great project that's got not just got some great financials behind it, but also very much a long life as well. And so we believe that there's a real opportunity to make this a long life project in the Pilbara.
Sure. Okay. And thanks for that answer. And the next question. So you talked about being a brownfields operation, and that helps with permitting, of course. Yep. So which hurdles have you already cleared in that regard, and what will there be left to do in terms of permitting?
Yeah, there's a couple of environmental studies. We've already engaged a group to actually do that, because they have to do a lot of baseline work, and that could take 12 or 18 months. So that's the first step that we've actually started, and we've actually commenced that already. I guess where we're lucky is that we do have 4 existing mining leases on this area, so it is brownfields. Heritage is in good shape, so we're very good there. Obviously, we'll be working on other areas such as power and water in regard to permitting. Tailings dam, I think if anyone reads the scoping study, they'll see that we're probably going to build a new tailings dam rather than using the previous one. So there's lots of steps like that we'll just have to tick off as we go through the next 6 to 12 months.
Sure, thank you for that answer. And just on the gold price, there has been a little bit of volatility in recent weeks, which isn't unusual, of course. Yep. Any concerns about that, or do you feel like the scoping study has covered all bases in that regard?
Yeah, look, in some ways, I think it's good that the gold price has actually come off the boil a little bit. Was getting a little bit frothy, I think, for a while. It's probably at a good position now. But again, that's why we've been very conservative. We've used $4,500, which is less than $3,000 US as well. So we think we're in a very good position. We want this to fly on the base case. Everything else is cream.
Sure. Okay. That makes sense. And just looking ahead, what can we expect next in terms of news flow, and just thinking about the PFS, what will the initial work on that look like?
Yep. Certainly in regard to news flow, we'll be putting out some information just in regard to Mt Olympus itself and geology in the ore body. Also in regard to future drill programs. That's the most obvious. Also, we are doing a little bit of work on some of the brownfields exploration as well, and we might provide some more information to some of those resources. And that's, I guess, pretty consistent with the work we'll be doing on the PFS as well. As I mentioned, we are increasing our team and our resourcing, and we'll have some more to say about that in the next couple of weeks. Sure.
Okay. And another question, which I think you have answered to a degree, but the concentrate which you have proposed to produce, you did mention there's a lot of demand for that in the market at the moment. Where does that demand come from, and is it a very competitive process amongst the buyers? Would you suspect?
Yeah, we understand at the moment that about 10 to 15% of gold produced globally is through concentrate. We have been talking to some of the major traders in concentrate, and the response has been very positive. So we're very confident this is the right approach to go, especially too because the concentrate coming from the Ashburton is relatively clean, low arsenic, highly sought after. So we believe that that gives it its true value, especially too because of the grade. It's 25 grams a ton, almost an ounce a ton. So that's where you get a good payability in regard to the concentrate.
Okay, sure. Well, that actually wraps up all of the questions for now. So thanks for those answers, Luke. Very comprehensive as usual. So just to sign off, do you have any closing remarks for our listeners today about the project and the scoping study?
Yeah, thanks, Ben, and thanks for the opportunity. A lot of work's gone into the scoping study, and I certainly don't expect everyone's going to read it. I think it's well over 100 pages. But I guess if you just read the ASX announcement, it'll give you a very good overview, and perhaps even this presentation. I guess the key drivers are it's based on a conservative gold price. The financials look really good. The upside is tremendous, not just potentially in regard to the underground, but also in regard to regionally. And we're pushing along with this project as fast as we can. So we think it's a great opportunity. It's a real catalyst and turning point for Kalamazoo going forward.
Brilliant. Thanks, Luke. And thanks everyone for joining us today. Before I sign off, there will be a recording of this webinar, which we will circulate to all of Kalamazoo's followers. And I'm sure there'll be a few more after today as well, I hope. So thanks for that. Thanks, Luke.
Thanks very much, Ben. Thank you, everyone.